I think that by October's end this year, there'll be enough disruptions in the markets that most savvy investors, even investment houses, even the mainstream financial media will have to acknowledge that, there is no soft landing. There's no possibility of a soft landing. And we've got to readjust to a new economy, with less goods, less services, higher prices.
The global battle against inflation rages on as several major economies, including the United States, the United Kingdom, China, Japan, Germany, and South Korea, face imminent recessions within the next few months. On Thursday, after jumbo 75 basis points hikes from the Bank of Canada and the European Central Bank, U.S. Federal Reserve Chair Jerome Powell once again understated the central bank's resolve to issue more interest rate hikes to fight inflation. The Fed has raised its benchmark interest rate 4 times this year. The last 2 were jumbo 75 basis points hikes, with the Fed funds rate now set in a range between 2.25% to 2.5%. But there is more to come. In fact, the central bank is expected to announce another jumbo interest rate hike during its September 20th to 21st meeting. But at what cost to Americans and the economy? According to David Morgan, the founder and publisher of the Morgan Report, the American economy is about to get hit from all ends. Morgan, who has been publishing his financial newsletter for over 23 years, explains that in addition to crippling the U.S. economy, the Federal Reserve will not win its fight against inflation. It seems the central bank is now between a rock and a hard place, and none of its options look good for Americans. We will now take you to David Morgan's broadcast. Please watch the video to the end, hit the like button, and subscribe to the channel. We also love to hear from our viewers and subscribers, so please drop your comments and observations in the comments section below and turn on post notifications for more videos. Let's dive right in.
They can't raise rates where it'll do any good. They can pretend and continue to raise rates and then act tough. And really, that's the most morally correct thing to do as far as saving the U.S. dollar. If they really want to save the dollar, they get close to what Volcker did until the bond market had so much pain and so many losses on paper on what the bonds were, but the yields were high enough for the market to say, okay, we trust the dollar again. That's a remote possibility. They could go that route. Or as everyone in our peer group, or almost everyone says, they're going to get so much pain, the markets are going to be screaming, and they're going to say, okay, we've got to pivot and lower interest rates. Well, once that's done, then they're basically throwing in the towel for the world to see, and they say, we're never going to get this debt under control. We're never going to pay off the debt. We're never going to make good on our word. It's like closing the gold window. It's like, well, the trust in the dollar is, just trust us. We'll work it out somehow with no idea, with no way to work it out, no way out. And so trust us. We're going to lower interest rates. Things are fine. We know what we're doing. No, they have no way out, none. And I think if they start to lower interest rates, enough people, it won't be the vast majority, but maybe another, the 1 or 2 or 3% will say that's it. The U.S. has given up. They're going to try to print their way out of this. The dollar's going to become worth less than it is now, worth less and then worthless, toward worthlessness. And that, again, adds to the psychology that's already instilled, which is higher inflation. So they're between a rock and a hard place and no way out. I think they'll go another couple of sessions and raise interest rates further. And then I think there'll be a pause. And the pause will kind of be a cue that they're going to probably stop or back off. But again, they cannot get interest rates high enough to really do any good. So they can continue to act tough to save the dollar and get all the suckers to invest in the U.S. And there's nothing wrong with investing in the U.S. if you know what you're doing. But I mean, most everything is overpriced and undervalued. It's overpriced. The value that you're buying is not worth the money you're spending. In other words, the equity markets on aggregate are way overpriced. There's some value there, but not very much. Specific instances. The bond market, basically you can't trust it, and yet that's where the faith and good credit comes in. That's what everyone trusts. I mean, the whole banking system is based on, the U.S. Treasuries. There's other bonds, but really it's the Treasury market And a lot of nation states have backed off. They're not buying treasuries, they're selling it. And the Fed itself says, well, we want to, tighten our balance sheet. We want to sell some. Well, who are you going to sell them to? If everyone's selling, who's buying, right? So anyway, I think I overthought that question, but it's scary times, and it doesn't mean the end of the world. It doesn't mean a total financial collapse. It doesn't mean any of that stuff. What it does mean is more uncertainty in the markets, more volatility, more prices that you can't really forecast, more businesses going out, more corporates leaving because they're zombies. They do not get enough income from their business to pay the interest on their bonds. So those bonds become worthless. So those zombie corporations leave the scene. So I think that by October's end this year, there'll be enough disruptions in the markets that most savvy investors, even investment houses, even the mainstream financial media will have to acknowledge that, there is no soft landing. There's no possibility of a soft landing. And we've got to readjust to a new economy, with less goods, less services, higher prices. Goods that you wanted at one time that were readily available become obsolete or don't exist. More tension between nation states where we're going to keep whatever, our natural resources are, our finished goods for our citizenry, mostly talking agriculture stuff like Ukraine not shipping out their wheat, that kind of thing. Well, our people need to eat too, and we don't really want your paper for it. We want to keep the wheat, that kind of an attitude. So less globalism is what will be the trend.
As David Morgan has explained, we are currently witnessing a major paradigm shift in world economics. So many things are occurring at the same time, and everything seems to be spinning widely out of control. Between the Russia-Ukraine war, food and energy crisis, supply chain issues, and the transition to green energy, there is really no telling how and for how long all this will play out. In his interview, Morgan also discusses greater economic woes that will be characterized by a lack of trust, decreasing opportunities, and lots of market uncertainties in the U.S. financial markets.
Well, there's an expression that all inflations end in deflation. So that's probably the most likely. I mean, if you go to where, the currency isn't accepted, like in Zimbabwe, then what do you do at the end? Well, you go to, in their case, you went to U.S. notes, physical pieces of paper that said Federal Reserve note on them, or precious metal. In this case, if the U.S. Federal Reserve note is not trusted, then of course precious metal. There could be other things. It'd be more or less a barter society, at least for a while. Cryptocurrencies would fit in there in some fashion or form, and there'd be alternatives. Is what would take place. But as far as the question, deflation, so you see where the fact of deflation and inflation have a lot of similarities, and I know they're different words and have different meanings. But in either case, you have a lack of trust, you have a decreasing opportunity, you have business failures, uncertainty, depressed attitudes, and lack of trust, as I said earlier, but so there's not a lot of difference. The difference being that in one place the currency fails, and so you go back to some type of substitute. And in a deflationary depression where it ends, that trend is pretty clearly established. The money becomes more valuable, but that usually takes place in a specie money system. So like in the 30s, they inflated the money supply by changing the value of an ounce of gold from $20.67 to $35. So after they nationalized the currency, the gold that the people held, so they gave them value in currency, and then they changed the value. So my point is, there is no gold standard anywhere in the world. We're on a fiat system everywhere. And the most likely outcome is a transition. Now, I have to interject here that the powers that want to be the parasite class, they have got envisioned, as I said earlier, that they can handle that transition and do a reset and force everybody into central bank digital currency, force everybody to have a real ID. And, the technocracy is going to take care of it. All you have to do is stand in line, let our little machine figure out what your DNA is. That's your identity. Now your identity is tied to the computer. All you have to do is look in this little box over here, and your QR code is scanned off your eyeball. And now you are who you say you are. And now that we've got you banked, we're ready to go. You're good to go. The problem is, the more complex the system becomes, the more points of failure there are. Secondly, the amount of unbanked in the world is great. There's a huge amount of unbanked people in Indonesia, in South America, Mexico. It's really the free world, in quotes, the Western nations, particularly, Europe, Canada, the U.S., that are all, for all practical purposes, everyone is banked. So if they want total control, they've got to totally control the monetary system, and that's easier said than done. And so that's why I'm fairly optimistic that the best laid plans of the WEF will not succeed, at least not to the level that they expected to.
Not only is the world's economy on the brink of financial ruin, but we are also trying to fend off the malicious intents of absolute domination from the world's elitists. Could this be a coincidence, or is this a part of the World Economic Forum's plans to eliminate the middle class and control everything? Please let us know what you think in the comments section below. Also, ensure you smash the like button and subscribe for more videos like this. Thanks for watching.